The income machine. Today we're going to be talking about that machine on Vertiv Holdings. The income machine is the wheel strategy where we sell cash secured puts until we are assigned those shares, and then we start selling covered calls on those in order to generate income. We are also going to do an update on the MicroStrategy and NVIDIA wheels that we've been running for about a month now, so stay tuned for that. Now, before we get into it, smash that like button, subscribe if you've been with us a while, haven't done so already. Check out the Trade Cave store, link in the description as well as the channel bio. Let's get into it. So, Vertiv Holdings, what is that, you may ask? Well, they are actually going to become a pretty important company in my opinion, at least from what I understand of what they do and what is coming. So they are an infrastructure company for data centers, and what they do is immersion cooling. So they provide immersion cooling solutions. We'll come over here. This is a profile. It's an American multinational provider of critical infrastructure and services for data centers. So basically, they're going to be providing immersion cooling. And if you've noticed with NVIDIA's new Blackwell chips, they are going to require immersion cooling in order to run. So they're going to need to have immersion cooling if these data centers want to run the latest and greatest NVIDIA chips. So they're going to be needing to get ahead of that now and start having the infrastructure for that immersion cooling. We also know that Bitcoin mining needs, or doesn't need, but performs much more efficiently when the Bitcoin miners are immersion cooled. And many of the Bitcoin mining companies are moving into HPC data centers, meaning that they're going to be building out this infrastructure in their data centers for their HPC compute. Well, they'll probably also build some of that out into their Bitcoin miners in order to get the most bang for their buck out of their Bitcoin miners. So this company, it's not the only one, but it's one of few that provides that immersion cooling solution for big data centers, okay? And they have been seeing a huge run-up for quite a while here. You can see they've had this big run-up. Let's go on to the monthly, actually. Boop, monthly. You can see the monthly. That illustrates how parabolic that move was. Wow. Anyways, it was basically pretty much from May 2023 is when it really took off, because it was flat up for many, many months up until May 2023. And that ran from May 2023 till about May 2024, right? You see May 2024 is when the peak was. Let's see here. Let's get it. It ran up 625% from May 2023 to May 2024, okay? 625%. We finally got our pullback. Notice how there was no pullback that entire time. We finally got our pullback. This pays to be patient, right? We got our pullback. That pullback in total was about 42%. Now we have got a hammer candle on the monthly. On the monthly, we have a hammer candle at the bottom of the move. Okay, we'll analyze this chart a little bit later. Monthly, hammer candle, bottom of the move. Love that. Let's move that out to the weekly. On the weekly, same thing. We came down to the 50-week moving average, which was also the bottom of the ATR bands. We bounced off of that. Okay, we bounced off of that. Beautiful. We are printing a bull flag right here, and we are getting that breakout candle from that bull flag right now. So if we see that continue to drive up next week, yeah, I'm gonna feel like that's pretty confirmed there. We will need to get above the $87 mark at the 20-week moving average there, but let's move down to the daily. The daily's looking good too. The daily created this nice cup here in order to scoop us underneath into the 20-day moving average, which is this thick yellow line, not to be mistaken with the thin yellow line, which is the ATR band. And it scooped us and went above the 50-day moving average, which is where we closed out last Friday. That is good. This is all good. This is looking like it's getting staged to make a move up into the high 80s, mid 90s, okay, for now. We could see a potential pull back into the 20-day moving average. Maybe it might also be closer to like the 5. We'll see as time moves on. But that's not what we're here to talk about right now. We're here to look at the options, because what we want to do is see, can we take this stock, retire off of it with something like $100,000, and do that consistently and safely. So let's go ahead and do this to a straddle. So we're going to try to take $100,000 here and turn that into some kind of usable income. Now, of course, that's likely not going to be an income that's going to let you live somewhere like New York or Los Angeles or, say, Austin or Houston or some other city of that level. Obviously not. to live those places, you need to be, I mean, honestly, you need to be making 100,000 plus, and even then, like, yeah, I mean, as you know, I'm based around LA, and I have friends that make over 6 figures, and it's still a struggle here. So you need to make a ton of money to live comfortably in these areas. So anyways, we're looking here at the puts, because we're going to start with the puts. All right, so with $8,100, which you know, you're a few dollars out of the money, but we're expecting it to move up. If we look back at the chart, I'm going to flip back to the chart here. Yeah, we'd be looking like a 77 would be our lowest area, probably settling around $80. Yeah, $80. Honestly, $80.50 is probably about the low we can expect here based on this little structure back here that could catch us. So about right, let's say that for sake of argument, right there. Okay, let's turn this off. Let's turn off our flip clouds right now. That for the sake of argument, about 80.37. It's about the lowest we can expect. Okay, the premium on 81 is for, and this is for a week, by the way. This expires on Friday, next Friday. Is $175 currently, and that would mean that you're pretty much safe down to about $79.25. $79.25 before it becomes profitable for the, you know, for that to be executed, for that put to be you know, assigned on you. All right, so you're pretty safe. You have a little bit of a cushion past 81. This thing is not profitable for the owner of the contract that you sold until $79.25. Any execution before that, and you're just working with a total amateur, you'll be fine, because honestly, it's probably going to go up anyways. And if that happens, you switch over to selling covered calls, or you roll. You know, we can talk about those things more complicated concepts later on in, you know, videos dedicated specifically to that. Anyways, 175 for 81 for $81. Okay, whoop, let's make that so 8,100. What we have is $8,100, right? Well, we're going to start with 175. So, okay, 175 is the premium divided by 8,100. That's the base. You're looking at about 2.16% per week. Now we times that by 4, right? Which I should first times it by 100 so I don't get weird numbers. Times by 4. This is going to be for the month. And you're looking at 8.64% for the month. That's not bad. Let's look about how does that come out for the year. Times by 12 for the year. If we're successful to do this for the year, we're looking at 103%, 103.7% for the year. Okay, 103. So it's basically 2.037 for the year off of $8,100, right? If you wanted to do the math on that. So let's go ahead and do the math on that real quick. So we take 8,100 times by 2.037, and basically you'd be making at the end of the year you'd end up with $16,000 including your base. We don't really want to include our base, I guess. So 8,100, let me do this a little better actually. 1.0 oops 1 point, not minus, times 1.037. So at the end of the year with your $8,100, you could potentially make $8,399. Okay, that's not bad. You divide that by 12, and you can produce off of $8,100 an income roughly about $700. Okay, not too bad. Now, let's say we have $100,000. How many contracts could we do this with $100,000? Okay, calculate. Calculator, I know I'm filling up the screen with you know I love it. You know I love to fill up the screen with calculators. So $100,000 divided by 8,100, you have the potential to do about 12 contracts. Ignore that 0.34, that's not a whole contract, so you can't do it. Potentially about 12 contracts with $100,000. So this monthly income here, $699 times by 12, you could potentially make $8,399 a month with $100,000. That is crazy. That's absolutely crazy. That's nuts. Let's see if that math checks out. 8,100 times by 12, that's about $97,000, and we said you're going to be making 8.6% per month. Okay, times by 0.0864% per month. Yeah, that's about right. If you're pulling in 8% per month, a little 8.6% per month off of about $100,000, you're looking at $8,398, which is $1 off from what I just said there, with $8,399. So you could absolutely do this. You could absolutely do this, and you could sell it by the weeklies. And I would sell probably by the weeklies, because let's go look for a month out. So we've got 175. Let's see here. We got 175 per week. All right, if we sell weeklies. Let's go about a month out. How far is a month out from here? October 4. All right, October 4, about a month out. There's no volume a month out. There's no volume a month out. 84 would be 570. So let's find something that has volume. 27th, 81, 350. Okay, so that's about not a whole month, but like 3 weeks out. So slightly less than a month out, you're looking at 375. Okay. Oh, sorry, 350. So 350 divided by 175. It's only 2 times more for a whole month almost. So 3 weeks. This is 3 weeks. So a whole month would probably be like 2.5 or something. So there's not a lot of value in doing it further out on this one. I've noticed that this one has better, much like MicroStrategy, this one has better volume or better value on the weekly versus the longer dated ones. Because like even if we go to 2 weeks out, let's go here. Instead of that, let's go 2 weeks out, or September. Yeah, 2 weeks out, 81, 285. You know, it's barely better than September, not even, you know, almost the same price as September 27th, so that's worthless to do that. What about the 20th? $81. We go down here, 81, $420. So that was not too bad, 420. 420 divided by 175, unless it's 4x, 2.4. 2.4, not even 3x. So we you know, the weekly was better on this one. So I would run a weekly personally with get my 175, times that by 4. We're looking at about $700 per month off of each one. Times that by 12. Again, that's a lot. That's a lot, honestly. That's a lot. You can make a lot of money off of that. 8,400. Now let's say we times that by, because that's per month, right? Times that by 12, and you're looking at $100,000 a year. That's insane. That's 100% return basically if you're capable to pull this off. Now, if price keeps just going up and up and up and up and up, you're going to end up using more of that capital towards that. So you're going to end up not being able to live off of that necessarily. You might need to, you know, build it up for a year and then do it next. But that's not what we're talking about right now. We're just talking about generating that income. Of course, there's some pie in the sky sort of ideas here in relation to that, and it's not going to work out perfectly. You're probably going to nail this thing like 60% of the time, right? So let's say you did 8,398. So 8,398 with your $100,000, right? And you nailed it 60% of the time. Okay, 60% of the time you're nailing this thing. That's $5,000 a month. Times that by 12, $60,000 a year. That's a solid income. You can live in a lot of places off of that. Now, that's what we're looking at for this specifically. So once we start rolling over into calls, let's say we start rolling into calls, what is that price? It's about the same. About a week out, near the money, you're looking at $300. $300, $200 if you're a couple bucks out from the money. And you can run this indefinitely. I've been running this on my other 2 holdings for a while here. And in fact, I'm going to do a deeper dive in Vertiv later, like another video where I talk more about like their ownership and their balance sheet and stuff like that. But this video is going to get way too long if I do that, because I want to cover my NVIDIA and MicroStrategy puts that I've been doing already as well. So we're going to stop that here with Vertiv. So Vertiv, you can make doing a weekly cash secured put on this thing at a strike just out of the money, you can make about $175 a month off that, maybe 200, depends on when you open it and close it. And if you have $100,000, you can potentially be making upwards of $8,000, more than, you know, $8,000 per month. And if your hit rate is only 60% in terms of you only are successful at this 60% of the time each week, you could potentially make about $60,000 a year or $5,000 a month off of Vertiv. So this is absolutely totally doable. And this is a stock that is going to be entrenched in the AI boom, especially with the brand new chips requiring that immersion cooling that Vertiv and very few other companies control or you know, selling to these big companies, these data centers. Now, this is a pick and shovel sort of play, meaning that this is the company this is the company selling equipment in order to produce the product, which is AI or Bitcoin in this case. So once this is going to be closer to like a Cisco play in in the dot-com bubble, if you all remember that. Not to say that it is a bubble, but in that particular bubble, Vertiv is the Cisco of that time, which means that it had its run-up until the infrastructure was in place, and once it was in place, they weren't really needed anymore because they didn't need to replace the infrastructure that frequently. So this is a play that's probably only going to be good for maybe a year or two max, like a year or two max, because once the immersion cooling is in place, it's in place. They're not likely going to need to update their whole facility again to produce, to provide immersion cooling for the HPC and Bitcoin mining. So don't think that this is going to be a thing that is forever. It's never going to stop going up. It's going to find a plateau at some point. It's going to hang out there, and then it's going to start paying a dividend, and that's when you know it's pretty much done. So pay attention to that. This is a play that's going to be good while the AI boom is booming, and not really any time past that. All right, let's move on to NVIDIA and MicroStrategy. I put it up in a nice little spreadsheet here for you. So I've been doing this since the end of July for both of these, okay? For both of these since the end of July. My total so far for a month, I've been doing this for a month, on these two plays is $2,633 off of these two puts. Selling cash secured puts on these. MicroStrategy, I've been doing it every week. NVIDIA, I've been selling out a month, and every time I get to 60% plus profitability, I've been selling it and opening a new one when it looks good. You can see right here, this was August 5th. Look at this. I sold the open 800, sold the close for 600, right? But yeah. And then I ended up doing another one at 1400, and then selling to open at 1450. Like this little section right here was a bit scary and got all messed up. But look at what I sold it for immediately after. I made $1,000 off of that, which was barely profitable from that, but it got me out of that hole, and then I just started trucking on from there. Okay. $2,633 is what I've made between these two. $1,261 on MicroStrategy, $1,371 on NVIDIA. Okay. NVIDIA, it is completely closed out. So all that profit is locked in. MicroStrategy, I still have some open plays on that. And I'm going to open this for you right now and actually show you that. We've got the NVIDIA receipts here. They got cut off here at the top here, but that 413 is 413, which coincides with what I wrote down here for that line 16 there, 413.66. But these are the receipts for my NVIDIA moves. You can see them there. You can pause on the screen, take a look at that, see that they're all in there. Check my math if you really want to. Please check my math. I'm not very good at it. Anyways, that's NVIDIA. Go ahead and pause the screen if you want to see those receipts more thoroughly. This is MicroStrategy now. MicroStrategy, these are my receipts for MicroStrategy. You can see here in the top left, this is my open contract on MicroStrategy. This is the one that I sold. I rolled it. And so, I went in the negative here. You can see I opened one for 387. I ended up buying it back for 962 and reselling it for 1,035. I'm currently in the red, $284 on that $1,035 sale. But it's open. So not all the, I'm not locked in right now. So MicroStrategy, I currently I'm really only locked in for about $200 of gain on MicroStrategy. So this 135 is not locked in yet. It will be. I'll get there. And we'll talk about that chart actually right now, because that's the one that's a little bit in peril. So let's take a look at that. So MicroStrategy, this is the daily. So what happened? I sold that put up here, the first one at 146. I rolled it down here at about 134, 135. My current strike price is 142. Okay, 142, I'm $10 in the red right now. So it is actually very close to being profitable for that contract to assign me shares. Okay, it's almost profitable for it to do so, in which case I would be down $1,000 immediately on my stock. But I'm not too concerned about that, because if I come over here and I go to MSTR, and we go to the options, right? And we go to straddle. And I come down here, we scroll all the way down, and I go to calls, right? I go to calls. I don't want to go to September 6th necessarily. I want to go about 2 weeks out on this one, because it's not likely that I'm going to do this system. Okay, 2 weeks out. If I sell at the money, I get $720, right? 2 weeks out. Let's do it 1 week out. Let's just do it 1 week out. So let's say here I sold one at the money, it'd be 450 at the money. In 2.5 weeks, I am back to break even on that that $1,000 in the hole loss from buying the shares $1,000 less than they're worth. Okay, but I'm not going to do that because if price, so one, I like where it is right now, right? I like this daily candle. Honestly, that's not bad at the bottom of the move. This doji, this type of doji doesn't bother me. I actually don't mind that at all. I don't necessarily see it getting any lower than about 130. So what I'm trying to do and what I will do is let this continue to get closer to expiration, have that price come down on my current contract. And then around maybe Friday or Monday of the week after, I'm going to roll it. All right, I'm going to roll it. I'm going to roll it down about, I'm going to go about 2, maybe 3 weeks out. Depends on what it looks like at that time. We'll do an update video at that time. I'm going to roll it out for about 135, which is going to be above the current strike price, okay? So I'm going to roll it out about 2-3 weeks above the current strike price, which if we look at that right now, let me, sorry. About 1, 2, 3, about 3 weeks out, if I roll it out and I'm about 135, let's say near the money or a little bit in the money. Let's say it's a little bit in the money. We can roll it out a little bit in the money. I don't know why 133 is so expensive, but anyways, but like $2-3 in the money is 3 weeks out is $1,000. There you go. So one, I'd be lowering my cost basis by $700. Two, I would purchase back that 142 and sell it 3 weeks further out for about $1,000, which if we go, let's go a week out. What is 142 a week out, right? 142, well, let's see 135. Yeah, because I'm expecting price to go up a little bit. Or if it comes to 130, right? 142 will be 1044 a week out, right? 1044 will be 142 will be $1,044 a week out. Okay. Now if I go 3 weeks out, 135 will be 1045. So it'll be break even. So I'll lower my cost basis by $700 and break even on that roll. So I wouldn't be taking on any debits. I wouldn't be getting any credits, but I wouldn't be taking in on any debits, and that would break that even, plus lower that cost basis by $700, ultimately making me $700. So I'm not really too concerned about this. That's what I'm going to do. That's my plan. That's how I'm going to, I can go over this in more detail another time about like what rolling, when you'd want to do it, how you want to do it. I should have never sold that call up here. I should have waited for the day to close. I got impatient, and impatience burns you every time. I should have waited for that close. I would have seen that inverted hammer at the top, or a shooting star, I guess you can call it, at the top, and I would have waited a day or two, and I could have gotten a significantly better entry on that. So that was my bad. That was me screwing up. Okay, but that's okay. We're gonna be fine. Now let's take a look at NVIDIA. NVIDIA, I sold that put right after earnings. Okay, or I closed that put right after earnings, which was this day here. Okay, and it was somewhere up in this tail. When I was up, you know, it was. I mentioned how price went down, but I was still up more on that day, and I closed it out because I did not like this candle, and I was correct. Okay, didn't like that candle, and I was correct. Now Monday, this is what we're going to look at for, not Monday, Tuesday, sorry, Tuesday. This is what we're going to look for. So we got this ugly doji candle on Tuesday, or Friday, excuse me, Friday, which closed beneath the mid ATR band. Okay, Monday, I keep saying Monday, Tuesday, we're looking for price to open beneath that ATR band at 120.54. If price opens up beneath 120.54 and closes on Tuesday below 120.54, creating a detached candle from this mid ATR band, we're coming lower. Okay, we're going to come lower. We do have support at 115. Okay, 115.27, there is support on NVIDIA. Below that, we don't have support until we come all the way down to $108.74. Okay, so we might hit $108.74 off this. The other thing I'm looking for, so this is another thing I'm looking for right now. I am looking for an inside bar. An inside bar for this candle specifically. For the Thursday, August 29th candle, I am looking for an inside bar. An inside bar is a bar that basically lives inside the body of this candle. So it would live inside this box. Let me draw a box, actually. Let me draw a box. I don't want to draw like that. I want to draw a box. It would be a candle that lives inside of this box here. So if we get a candle on Tuesday that is below 120.54 and lives inside of this box here, that is some bad news. Okay, that's bad news for this move, because we have this big engulfing candle, and then we get inside bars, especially if they stay below that mid ATR band, that is a signal of a bear flag that is going to drive us probably down to that 108 level on NVIDIA. So pay attention for that. Watch for that. That's what we're looking for. We're looking for those inside bars that could potentially indicate, like inside bars creating a bear flag that could indicate that there will be further downside. Similar to like this. Okay, it's going to look like this. So let me draw this for you. So we have this big bearish engulfing candle right here, right, on August 22nd. Okay, and let me draw this box. Look how many inside bars we had there. Inside bar. This was green, but inside bar, inside bar, inside bar, inside bar. And then what happened? Dump. So that was kind of brutal. And now we did have this here. This was a bit of a fake out, right? We had these two tiny little inside bars inside this big green candle, but then it was immediately met with an engulfing candle. So it's usually, if you're looking for like a reversal, you get an engulfing to a reversal candle. Like this was a continuation candle followed by inside bars. So that was a bad omen. This was an engulfing reversal candle followed by 4 inside bars, which was a horrible sign for NVIDIA. I should have sold it when it was up here. And that was a good move after the earnings. I think earnings really saved me on that. Oh yeah, here we go. Something like this, right? Right here is not so bad. So we had this downtrend right here, right? Downtrend right here, followed by this big green engulfing right here on July 3rd. And then if I draw a box here, no. I draw a box here. We got a couple of inside bars, inside bar, inside bar, and then we broke out, right? And then big engulfing, inside bar, and then we broke down. So if you see an engulfing candle, an engulfing reversal candle, followed by some inside bars, you're looking at a bad time. Okay, that's all I want you to take away from that, what I was saying. So we're looking at potentially a bad time here for NVIDIA. NVIDIA will likely come down a bit, probably 115, maybe 108. Okay, from there we'll reassess. Because what's at 108? Let's take a look. What's down there at 108? Do we got any EMAs down there at 108? Not really. Let's see, what about the SMAs? Let me turn those on. Let me turn on some SMAs. That's not what I wanted. Let me turn on some SMAs. There we go. Let's do the 20. Is that the 20 or the 13? That's the 13. Let's make that 20. Let's turn this to the 20. And let's make the 50 and the 5. 20, 50, and the 5. Okay. No, we don't. We don't have any SMAs down there. Whoo, that sucks. What about a 200? Where's the 200 at? 200 is all the way down here. Okay, that's not good. So we don't have any SMAs down there to save us, to catch us. That's not ideal. What about the Bollingers? How's the Bollinger looking? I don't really want to deal with that, actually. Never mind. Yeah, we lose that. We lose the 20. Then it's the ATR band that's going to catch us. And that ATR band is going to probably meet us somewhere around 108 as it's currently up right now. Okay? So that's what we're looking at for this right now on NVIDIA. So right now, I'm just waiting. I'm waiting to see where it's going to land. And then when it does finally start to base and I start to get green bars on the MACD again, or the RSI is curling up nice, or some other sort of signal that I get here on like probably an hourly. I'll be looking on the hourly, honestly, for it. I'll be watching it on the hourly. And what I'll be looking for is, yeah, I'll be looking for it to come into the green cloud here. Maybe not even on the hourly. Maybe I should look on the 2 hour. Let's see, what about the 2 hour? How's the 2 hour? Whew, the 2 hour is way down there. Yeah, I'll be looking on the 2 hour. Yeah, 114, potentially like 108 where support is. We'll see where that cloud is at that time. But I would expect this cloud to come up and catch us around like maybe 105, 106 at the lowest. But I'll be looking at the 1 and 2 hour, looking for my entry there. This is really bad looking. Look how this is mostly flat here. This is creating a bit of a bearish pennant, and it could break through that 400 hour moving average there, and then it would come all the way down here. Yeah, okay. So there you go. That's NVIDIA MSTR. We're doing pretty well on our puts right now. I'm looking at adding Vertiv. Honestly, I'm looking at adding Vertiv because I like this chart. This chart looks really good. This looks way better than NVIDIA right now. And right now it's looking at potentially trying to do a breakout, which could move it up into like 88 or even 95, 88 to like 97. And then once it does that, once it gets above like this area here, once it gets above 95.75, we're looking at a potential run for the all-time high at 108 on Vertiv. And a lot of that is off of the news that Blackwell will require immersion cooling. Vertiv is one of the few companies that provides immersion cooling for data center solutions. Let's draw that channel right about there. And we're breaking out of this channel, and I like that. So I'm looking at adding this because it could make a similar amount of money that, actually a little bit more money than I'm making currently off NVIDIA per month, and it's significantly less expensive. So I could potentially run like 1 on Vertiv. We'll see. We'll see what's going on with that. But That's what I've got for you today. Please like, comment, subscribe, share this video if you found it informative or entertaining. Check out the Trade Cave store, link in the description, as well as the channel bio, and have a profitable day.